Good afternoon, everybody. This is David Friedman with my co-host Dave Burkus on TCA Crossroads, where entrepreneurs and investors connect. And how are you this beautiful day, Dave?
I'm doing really well. We're sitting here painting the house, which means move the cars and hope the overspray doesn't hit everything. It's a great day in Southern California, and I don't want to say that too loudly because as we record this, we are hearing about all that's going on in the South and the East. And I have a partner in Ohio for one of my ventures, and the shelves of all the stores are bare. And he's bought a snowblower for the first time, and it goes on and on. This is historic. So those of you that are listening to this after the storm is gone, remember this is kind of a pin in a day that is a little different than most.
Yeah, I feel bad for all the people there, but on the positive side, a lot of sleigh riding in Central Park. Eventually, when the snow at least gets a little more compacted and you can build nice snow people.
Says the New Yorker.
Way to say it, by the way.
So today we have an excellent guest with unbelievable background that I'd like to hear more about. So David, if you bring her aboard, let's just talk.
We will do that. And we have Christina Montague. Hi, Christina. How are you today?
I'm great, David and Dave. I'm so excited to be on this podcast. Thank you for having me.
Good to have you. All right. Well, Christina, can we start by asking you to just give us a bit of your background?
Sure. I am the managing partner of a micro VC fund here in Chattanooga, Tennessee, of all places. We were the first all-female-led, female-focused fund in the Southeast in 2013 and developed two funds here. I've also been with a couple other funds investing at the early stage, including Mindshift Capital and Next Wave Impact Fund. But I came out of education, and really our first fund was a proof point on getting more women's capital engaged in this angel investing arena, which I hadn't really been a part of before. And so sort of just jumped in with 2 feet. I've actually written a book about this called Jump In, because it takes some courage and some literally starting to do it to get into this game. But it's been very fruitful. And I, in the process of doing this, became engaged with the Angel Capital Association at an early stage in on this path, and I am now the chair of the Angel Capital Association, which is, as many people probably on your podcast it's the largest national professional organization and sort of meeting point for angel investors in the US and beyond. So that's a little bit, and we can talk more about how I got here if you're interested in that at all. People are always asking about that because it was a weird turn from academia into this, but here I am now talking with you two veterans in this industry. So thank you.
Nice to hear.
Well, so I want to take off on what you said. You're a micro VC. Okay. Now, let me set the stage for the first question, and that is early stage investing is very different today than it was maybe 10 years ago. Yeah. Dave has been around longer than I've been doing this 17. Dave has been doing about 30, 40 years, something like that.
Mm-hmm. A long time. Member of ACA since 2004, by the way.
You are.
And so things have changed, okay? And angels are acting different. There are micro VCs. You're seeing different deal structures coming in. We've seen the rise of Shark Tank, which made this now common knowledge that, Shark Tank entrepreneurship really is a cool thing to do. What do you see are the biggest shifts happening right now, even over the last year? And where do you see it going? That's what I'd like to try to focus on today, and the relationship between ACA, entrepreneurs, and investors. So let's step back and just look at where do you see the major shifts happening?
Good.
Well, I've been seeing a shift for quite a while, because when I jumped into this, there are very few women in the game. So there has been a shift on sort of the face of who are angel investors over the last almost 15 years now. That has changed dramatically. I think our latest Angel Funders report reported at least 25% of now female CEOs are being invested in, which is a huge increase. That's at the early stage. We still don't really have those numbers at the venture dollars. We see a huge increase at the ACA in women who are engaged in this as actual angel investors. So I like to say when I first started, it was 800 people conferences, and there was a line for the men's bathroom and not the women's. So that should tell you something. Um, so that landscape has really shifted, and a lot of us, it's sort of this newbies to it, have come in through these smaller funds versus a network, because some of the networks have been more established and are a little more male dominated. And so a lot of us have said, okay, we're going to do these proof point funds. We're going to kind of just gather a quick, several $1,000,000 from angels like us to deploy into companies that we want to focus on that haven't seen this kind of capital. So that's one shift that definitely has taken off. And now we say, I think there's over, anywhere, depending on the metrics you look at, about 40 to 45% of all angel investors are now women, which is a huge shift from 5% when I was first starting in this work. So that's a huge shift. There's definitely that there. The other piece is really coming out of the pandemic, when we have all been, now it's de rigueur to have us look at companies online. We can look at companies from anywhere at any time. We can see pitches. So the deal flow has really changed. It has somewhat democratized the process. I think it's taken away some of that trust and that, trusted relationship building that we have always really valued as angels, but it's a really different market out there. And then you have all these new platforms coming in. So you have platforms that you could go invest $1,000 a pop, even, $50 a pop in some equity fundraising that these companies are doing on online platforms. So it's a very different ball game. It's no longer country club. You only see the deals that are brought to you by a select group of people. It's very democratized. That brings challenges with it. Who's doing the diligence? How are we really assessing these companies? Is there just sort of a glut out there now? How are we kind of paring that down? I do know some of our recent research and some of the other sort of CB Insights research is really that, now we have this next generation of exited entrepreneurs who are becoming angel investors, and they look at this game very differently than their predecessors. So they want to be quick, they want to be nimble, they use a lot more AI in their due diligence, and they are moving rapidly forward and deploying capital in a really different way. And they kind of don't want to play in the old boys clubs at all. I mean, in the old clubs, I would say at all. I would even say some of our quote unquote women's clubs are a little stale at this point for how they want to move, how they want to see themselves as early stage investors. A lot of them are not even calling themselves angel investors. So there's been a huge shift. Obviously, AI is a player even in our business, because people are using that to more rapidly assess companies, assess competition and market, use it for due diligence. People have stood up their own due diligence processes for their groups. That really helps us to move more quickly, I think, and that's a good thing. Although I do, again, think it takes a lot of that human touch out of it, which I always felt was a real added value as an angel investor. And when you pointed out that I said micro VC, David, I used to never use the term VC with our fund. I always said it was an angel fund, because we invested alongside angels. We were brought into this early stage investing by other angels. So Golden Seeds, the largest network of mostly women investing in women-led companies in the US. They've been doing it for over 20 years. They were our mentors in this. So, I didn't used to like to use that term, but that is really the term that most people use now for our kind of smaller fund models, where they might be proof point funds, they might be sort of a series of smaller funds together, but we do invest more like a VC firm would, in that we have LPs and we don't have, members in a network like it used to be. So I'm going to stop there. I just threw out a lot of things, and that you may want to take it in a slightly different direction as well.
It is interesting that you use the term micro VC, because as we developed the ecosystem, we said that those were the funds that were coming in between VCs and angels, and that the average micro VC fund was around 40 million to 60 million, which was a very small fund in this generation, considering that the VCs have moved upstream.
Well, and ours are even smaller than that.
That's about the same.
Yeah, I mean, we're sub $10 million funds. So
yeah,
they're mini.
Mini, there we are.
Mini micro.
Mini micro.
Yeah.
Okay, well, we can make jokes about that, but there's truth.
Yep.
Almost every one of the angel groups now either has a
Yeah.
sidecar or leads with their fund,
Yes.
and has
Yeah.
changed the environment considerably. And the big question for you is, how do you handle a deal lead? Do people follow individuals anymore into deals?
Yes, we have a 7-person GP team, so we divide it up amongst our group, and then we bring in any of our expert LPs into that process. With Next, so we're a little more traditional in that model. When I worked with Next Wave Impact Fund on their investment committee, the investment committee would serve as leads, but we would bring the LPs in at the beginning. They would be helping us screen the companies. They would immediately join a diligence team for the companies they were most interested in, and they would help us make that final decision. So they were much more involved like you would be in a network or group. And part of that was because we incorporated education really heavily into that Next Wave Impact model.
Right.
So Alicia Robb had started it with the Rising Tide Fund, where it was a proof point of $1 million fund, 100 women. Let's just get people's feet wet in this. Then she went on to start Next Wave, which was a slightly larger fund, but we were really active in how we engaged the LPs because they all wanted to learn. And from that, I would say, I don't have the exact numbers, but at least 5, maybe close to 10 new angel networks or funds have spun out of the women who were involved in that first Next Wave Impact Fund. So just by that learning by doing model, it helped us sort of to engage them in this asset class and then gain the confidence to be able to go out and do that, in their own backyards or around specific areas they were most interested in investing.
I want to flip it back down to, you have 2 basic parts of your body. You're kind of schizophrenic in many ways, right? So you have the ACA stuff and you have the jump fund. Mm-hmm. But I want to bring it back to ACA for a second, because I think it's important to look at ACA and whether or not ACA is focusing the right effort with the right group of people. I'd like to talk about how ACA is supporting entrepreneurs and how they support investors. Okay, so let's start with one. We know ACA has been the sort of like the linking pin for all these early stage investors, call them micro VCs, angels, whatever. Okay, what do you do to support the investor? And then I'd like to flip that and say, how are you now supporting the entrepreneur, given the fact that things are changing in the world? Good. In the investment community?
Yeah, sure. And I think that's a big shift, David. We didn't really, I think, used to serve entrepreneurs as much as we do now. And I think we're moving into an era where we're going to do much more of that. But I'll start with investors. I mean, the majority of our members have been either group leaders or fund leaders. And with that, then the membership of their groups, once they are a member, then everybody in their group or fund becomes a member as well. And so, through that, we have several different pillars. One is education. So we have everything from, if you're first into, it's first foray into angel investing, you're dipping your toe, you're trying to figure out what this is. We have, our Angel University, which runs through the basics all the way up to some advanced courses, including advanced cap tables and exits and returns, all of that. And I frankly was a huge beneficiary of that. I didn't know what I didn't know yet. And so when I jumped in, I immediately started taking all the courses and learned so much in my first year before we started our fund. So that was really important to me. We also, the network, I think, the network effect has even been multiplied now that we are able to have these syndication groups around either different focus areas for investors or different regions of the country that we do all online. So it's building community that way, but that way you can share deals investor to investor. So it's been just a new opportunity that we didn't have before when everybody was sort of, separated across the country. And then we are, both kind of behind the scenes doing a lot of data and research on this asset class and pushing that out there so people can have a better understanding of what's happening in the industry, as well as advocacy. And we've had a couple huge wins recently that we've been working on for a couple years now. We're part of an innovation coalition with big players like NVCA and National Venture Capital Association and Carta, not PitchBook, Carta, and some others, that we have all banded together on the Hill and are lobbying for better, expansion of QSBS, which is the tax advantage for early stage investors, and with that 1202, also reinstating the R&D tax credits. And so a lot of things that really benefit in both individual angels and angels and groups, we are advocating for on a daily basis. Luckily, we've had some big wins lately. Yes. And that has been really exciting, but we continue to push for those things that angels care about. So we're the advocacy arm, we're the place to network and gather and build community in this space, and we're the place for education.
Got it.
So Rule 1202, let's talk about that for just a second, because I think ACA was a very big piece of getting that rule to be changed in the favor of investors. So talk about that for just a few seconds. That's a win that we should talk about.
Sure. Well, we've had an expansion of the accredited investor status, and we've had an expansion on your tax advantage. The longer or the shorter term you can hold a company, you're able to, if you have capital gains, you're able to have a tax advantage on that. We did have some advances, a few years ago on 1202, but the big break came about a year ago. You can probably guess why, but we have had a very good relationship this whole time, not dependent on the who's sort of in political power at the time. With the SEC, we have one of our former chairs sits on the SEC Small Business an advisory council, and we have very active members up there on the Hill. So we are always engaged in that, Dave, and are always fighting for what's best for particularly early stage and angel investors. We might differ a little bit with the VCs and what they want, so we have to kind of find some common ground there as we lobby together. So I don't know if there's something more specific you wanted to pull up. We just had an excellent webinar this past week on the tax implications for angel investors. So if you want to go check out the ACA, you can find that there. It was a really excellent.
And I certainly have been reading about that. So sure. Let's flip it, as David asked a moment ago, and talk about what we do for entrepreneurs.
Yeah, so I think that's expanding now. Our education programming actually has been very much more attractive to entrepreneurs in recent years. They want to learn from the other side of the table. So we actually have a grant that we've been working with the Tennessee ECD, the economic their economic development arm. And it's targeting mostly entrepreneurs and getting them capital ready. And they have absolutely loved this program. So we do a cohort every season. We're launching our winter cohort next week on our Angel University, the bulk of which will actually be people from Tennessee, which is my home state now. So that the education is a huge piece of it. I would say also with syndication, just the way we are doing it now with the online platform, it's allowing a lot of companies who are already, pre-vetted by an angel group to be seen by a lot of other folks. So we have a life sciences syndication group. We have regional syndication groups. We have an impact investing. We have a growing women's capital. So you immediately get seen by groups all over the country, which really, pre-pandemic could not have been the case. And so I know ASN has a network similar to that, but it has been a huge advantage for those entrepreneurs to get seen by so many more people. So those are a couple ways I would say that we're supporting entrepreneurs. We actually are starting to move into a deeper relationship also with some of these entrepreneurial support organizations and networks, including INBIA or NBIA, it's called, so the Business Innovation Alliance. And we are moving into hosting a joint conference next year with them in Dallas, Texas. And that will be kind of a mashup, I like to say, of what they bring to the table around supporting universities and accelerators and incubators, and what we bring to the table around investors. And then we'll sort of do a collaboration in the middle. So that's a whole change for us. that we really were not entrepreneur focused before. We were very much investor focused. So it has shifted a lot. And David, you might have some other points where you feel like we're leaning into that.
Is that Dallas event going to replace the ACA in conference?
It is going to be a new format. Yes. Yes.
So if you're focusing more on the entrepreneur, is there a different member category for entrepreneur, or is it the same member category? Member of ACA, you're either an entrepreneur or you're an investor, you choose special interest groups, or is there a different membership category entirely for entrepreneurs?
I mean, it would just be the individual membership category. And so that's a pretty low bar of entry. And then that gives you, discounts into all of our education programming and our events and our gatherings. So it's, I guess I should say also the other part is, we do have our Innovation Funders Showcase every year at our summit, which selects 32 companies to be showcased, at a national event where you have 500 plus, sometimes up to 800 angel investors in the room to showcase your company. So that's another way that we've supported entrepreneurs.
Hey, Dave, do you want to ask a question before I finalize it with one really pointed question for Christina?
Well, wow. How do I get in the way of that?
I don't know.
I would like to just spend a few seconds on women again, going back to that, because that is one of the areas where you focus, Christina. You gave a stat at the beginning of this that about 48% of
40%.
all of, is that right? Of all the investors are now women?
Mm-hmm. Mm-hmm.
Last I heard, the number was like slightly under 20%. And so that's
what I had heard, yeah.
It's a big jump. So this is some came out of some studies that were published by Golden Seeds, which I said was the largest network. So yeah, recent studies. There's another research group that's looked at was about 38%. So that's why I say it's around 40%, not 48. And so that did rise, Dave, in the past 3 years, I would say, from about that 20% range all the way up to that. When I started, it was, probably less than 10%. And when Golden Seed started, it was 5%. So it is really about the network that we have grown. Part of that is the work at ACA. A huge part, of course, is Golden Seeds, but other networks like Portfolio that have sprung up, and then a bunch of emerging fund managers, some that are focused in different verticals like femtech or women's medical devices. Others that they may or may not be just focused on women, but trying to get more women's capital to the table. And there's a huge gap in the market because women, I think by 2030, are supposed to have, majority of wealth in this country is going to be held by women. So, the transfer of wealth is huge that's happening. And so if they are not aware of this asset class and the opportunity both for returns as well as really making a difference in investing in things that they care about, it's a huge loss. So we are trying, we've been running this race for a while to educate more women, but that's a huge goal for us. But yeah, we've seen this huge shift. It's excellent. So, we're not seeing as much as at the VC level, but it is happening at the VC level as well.
I'm a former college trustee, a 29-year college trustee. I'm emeritus just for the last several months. And the number of women that are going into first the four-year colleges is now 60% to 40% men. And when we get into the graduate schools, it stays at 60-40. So it's only going to be a couple of years before this next generation of entrepreneurs could very well be dominated by women.
Oh, absolutely. Yeah, most of the graduate level, even when I was doing my research 10 years ago on this, most of the graduate level and a majority of the areas that people, do bring startups out of, engineering, a lot of the sciences. Women are very heavy in the sciences, that the statistics on that were really strong and growing. So it's even more so now.
We'll see more women unicorns for sure.
That's right.
So it's interesting you raised the issue before I asked that pointed question that I wanted to ask. But it's interesting because I was on the phone with Sarah Dickey yesterday talking about how we can take the ACA content and their position in the startup ecosystem and bring it to do a collaboration with certain universities. So I think there's a great opportunity there. I know that TCA, which is our entity, has a relationship with both UCI and UCI. We have a lot of relationships. UCI, Caltech, Westcliff University, and the like. So I think there are opportunities that we can look at long term, which leads to my pointed question. So if you look ahead 5 years, what would success look like if ACA fully embraced a broader role in early stage ecosystem, not just for angels, but entrepreneurs, funds, and I'll throw in, just for the heck of it, strategic capital partners, because I came out of the entrepreneurship world, from a large corporation, but the large corporations buy the companies that the angels invest in. So where do you see this going? And this will be your swan song, in a sense, or your podium that you can march forward with. We'll take your choice.
Well, David, you've been very engaged with us. David, as you may or may know, is also on the board with me, and so we have been going through, a strategic process right now on this. So this is a hot topic for us. I really want to see this organization have a much wider footprint than it does. I think it's almost something that's sort of whispered about and not shouted loudly about. And I think that as we cast sort of a wider net here, that would include entrepreneurs, would include, the accelerators and incubators and all those folks, how do we really bridge this gap that's been there between the investors and the entrepreneurs? Everybody's been on either side of the table. And so this is the opportunity to bring people more together and have those conversations, which I think actually ends up making a much richer entrepreneurial ecosystem as a whole, if we do that well. I think we are well positioned to do that because people really want our knowledge. They want the inside baseball, right? They want to know how we choose companies, what the processes are that we go through, what does that rigor look like, so they can be prepared. And we've always been saying we wish these entrepreneurs were better prepared coming to us. And so how do we become that larger network for both sides of the table that then can come together when we're talking about capital? I think it all still has to be focused on capital. We're not going to be the ones, angels are very much engaged with their companies, and they're very much engaged oftentimes in their ecosystems on mentoring entrepreneurs. But our focus should be on this capital exchange, and how do we, one of our tenets of our mission is to fuel innovation and growth in the entrepreneurial economy. And so, a lot of this is, how do we expand access to capital? How do we get that money flowing more? And part of it is breaking down these barriers. So I see, a much wider net with a bunch of other, players coming in and taking advantage of the opportunity to connect with all of these investors, which has kind of been behind closed doors up until now. Dave Burkus, we're going to have a conversation in another couple of weeks with a lot of people who have been with our organization for a long time and how they feel about some of that too, because it is a big change. But I think it's very evident, the writing's been on the wall for a long time, that the marketplace has changed a lot, and we're going to have to adapt to it. So
I'm going to join you in that conversation, and I'm looking forward to it.
I'm looking forward to it too. So
at the same time, as the name of the organization, Angel Capital Association, allows for entrepreneurs to be under the hood. So we don't have to change a name. We just have to expand how we're going to do it.
David Friedman wants to change our name.
I may have a counter argument there, because I think that it goes beyond just angel investment in the traditional sense. But that's another discussion for another time. And with that, I really appreciate, Christina, you spending time with us. It's been very insightful. Just want to reiterate, we're seeing a change in complexion in the participants in the ecosystem, a lot more women, which is really good news to see investing in this alternative capital class. I think it's great for the diversity of their portfolio. We see new platforms coming in. We see the leadership that ACA has taken in on the regulatory front with the 1022, the qualified small business. We see the opportunities that you have ahead as this private capital, let's just call it private capital for now, is expanding with different entities now focused on different ways to play in this capital fundraising environment. I wish you the best of luck. Dave, do you have any final words before we close it out?
Christina, it was nice to have you tell us more about what you're doing. There were some surprises that you gave us and some things to look forward to in Dallas this next year.
Good.
So thank you very much.
Well, thank you. And I do want to encourage everybody to come to Denver this year. In 2026 is our annual summit. And so that's where we all get together and do, deep dive in this whole area. So thank you so much for having me, both of you, and I look forward to further conversation.
I just want to plant the seed that there's a really excellent speaker. His last name is Burkus. He's kind of related. Oh, it's the same guy. It's Dave Burkus. He would be a good one to talk about governance structures and other things because he has just such a great background. That's my kudos to you, Dave.
Gee, thanks, David.
And with that, on behalf of Dave Burkus, Christina Montague, and myself, we wish you good investing for TCA Crossroads. We'll catch up with you next time.